Good morrow. Just fixing me corners. Miss you guys. Did you miss me? I hope so. What a week. I'm exhausted. But it's only hump day, baby. I joined a boxing gym. So I'm getting back in shape, dude. It is what it is. My mind and my body are one. My mind, my body, and my trading are one. You know, take care of yourself, whatever. We'll do a little bit of back testing, but I haven't taken any trades this week. As you can see here. So, I mean, not a lot to talk about. But I am kind of excited about this ideal risk table that I created because I was sitting here looking at I did it here first, okay? Because I was like, so obviously NASDAQ moves a lot. And I only have so much money that I'm comfortable with risking at this point. And I don't want to guess. I don't want to do mental math. I'm bad at mental math. So why not just, give myself a little cheat sheet. And that's what this is. And all this is just like, this is just taking NQ and I measure out how much risk I'm about to take on NQ. You also kind of have to make these decisions a little bit fast because it's moving and you don't know exactly where it's going to close. So you can have to estimate where your risk is going to be. But let's say I'm looking at a candle that I really like, but it's kind of big. So I'm looking at a candle that's, let's say 25 points tall. And I say, when this candle closes, I'm going to get in. But I only want to risk $200. And 25 points on the NQ is $500. This is probably backwards. So it doesn't really matter. But you can't even see that. No, you can see that. $2,500 on NQ is $500. The fraction doesn't really matter, but it's I would have to multiply this number by 0.4 to get to my ideal. I only want to risk $200. So times 0.4 is $200. And 25 points times the same fraction is 4 points. How do I get that number? I'm doing a bad job of describing this. Not 25 times 0.4. I'm using the amount that I'm dividing. Holy moly, guys. I have a dollar amount of risk on NQ. I'm just figuring out how much I need to multiply it by to get it down to the dollar amount that I'm okay with risking on MNQ. Because micros are a tool to mitigate your risk. Apart from being a tool to learn how to trade because you don't want to start trading when you're on NQ and it can move $200 against you in a second. It can also be a tool to mitigate your risk when you are trading NQ, dude.
I like her.
It's a tool because 10 points on MNQ is 1 point on NQ. You're just breaking it down, dude. You're just breaking it down. Okay. So, example, you probably noticed I just spent a bunch of time doing a bunch of bullshit that I didn't need to do. So, let's just do it. Let's just put this thing to the test, man. And I'll run this by you left to right. Okay. Hopefully that broke nothing. So, top left. This is your account size. This is your ideal risk percentage of that account. You fill in these two cells and it spits out your ideal risk dollar amount, which again, I'm just trying to do 200 because it's 10 points of NQ. Just makes it easy. And then your instrument here, you can fill this out. I'm probably not going to change this because I trade NQ all the time. You can do ES. Right. But the table uses this to calculate some of this shit. So let's just say it was ES. ES is $50 a point. You can see it changed. So now, it's trying to figure out backwards how to get to 200 from 500. If I see a play if there's a 10-point move on ES, ignore the NQ because we changed it for a second. Do a little behind the scenes work. So if we're looking at ES and there's a 10-point move on ES, that move is worth $500, just one contract. 500 times 0.4 right here is our ideal risk of $200. Also, if we trade 4 contracts on this move of the ES, 4 contracts times the 10-point move, so 4 contracts times 10 points, times the $5 point of micro ES, not 50. It's what behind the scenes this column is dividing these two. That's also 200. So we're getting to our ideal all risk there. So if we put this back to NQ, $20 a point, 10 micros per point, 10 micros per E-mini point. Same deal. It's easy here because our ideal risk is 200. 10 points is 200, but it's just the same equation. It's 10-point risk, 10-point move times the $20. No, sorry. Here we should be using, because we're trying to find MNQ, right? 10-point move times the $2 value of 1 micro NQ point times the 10 contracts we're risking here. $200. It's super simple, and I spent a bunch of time screwing it up. But that's the idea. So let's say I'm fucking around on here, whatever, blah, blah, blah. Let's say I only want to risk 200 points and I see this candle form. Let's make it a little more fun. Let's say I buy at the top of this candle, okay? And I only want to risk this amount. I'm like, this is a nice move. It's a nice setup. But it's a 60-point move. There's way more than $200. What can I do? If I want to turn this risk into $200, I go to my table and I say, okay, 60 points. That's worth $1,200 on the NQ, right? About 1,200 here. This is the fraction that I want to get to from this dollar amount. You just skip all that and you see this and you say 60 points, $1,200. And I go across and I say, okay, I'm just going to buy 2 contracts of MNQ because that's going to give me $200 risk on this point amount in MNQ. And let's go see if that's the case. You're learning with me. Here it is. So yeah, this is 60 points and it's 118. So if you buy 2 contracts, you'd be risking a little less than 240, which is the closest. This is rounding. So the closest you can get to that's the closest you can get to 200. But you can set this thing up to round down if you want to be more risk averse, and then you can just do one contract, blah, 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 blah. But basically, if you see a 34-point move, you can go into MNQ and you can risk 3 contracts. If I see an 80-point move on NQ, I can flip over to MNQ and risk 1 contract. It's probably going to be more or less. It's not exact. I think one of these is actually one. Yeah. So 100 points is the risk that you would reach where 1 contract is exactly equal to $200. But again, it's just rounding. So do what you want to do. If it's helpful, I mean, look at the whole bitch. I'm just trying to make it easy as possible so I can just look and say, okay, that's how many contracts, instead of looking at this and then saying, okay, do I want to do 2 or do I want to do 1? I'm just looking at the whole thing like this, not like that, for sure. Not like that. If I see a 30-point move on NQ, I don't want to risk $600. So I'm going to go to MNQ and risk 3 contracts instead. That'll get me about what I want. Cool. That was way too complicated on my end. But just going back on, it was moving. It's recovering. What's the little chart review? It's been recovering from that big down move. So, kind of a little wonky, but we're getting there. We're climbing. And I just haven't been seeing the 5-minute, the MFs. Yeah, you know what I'm saying? I mean, you can't call this is a shitty zone. This is consolidation that it breaks out of, but bad zone. Doesn't really touch that. Doesn't touch that. Doesn't touch this. So we have a bias. That's the good news. The bad news is it's just too strong. Yesterday was the 4th. Did I draw these out? Shit. Okay. I guess I just didn't review it. Did I review it? I didn't do a video. No. I did draw these out because I was looking at it. So yeah, you don't get much here either. And what does happen is the huge impulse up, and then this is kind of these 2 are the best zones you have. We can see in hindsight that they didn't work out if you bought at this zone or if you bought at this zone. This reaction is no good because it breaks through. That's just a bad candle too. The first touch, I just wouldn't take it because it's too much red. This candle right here, second touch, also no good, closes inside the zone. Even if you did get a good one here, if you get a good candle here, you might take it because you are poking higher. But then again, you're coming down off like a double top. So that's a tricky one. But the good news is, like I said before, sometimes the market just tells you what it wants to do. Not always, but sometimes. Okay. And I don't know, maybe you scale down on that one. Maybe you say, 400 points. Man, that looks pretty good, but it doesn't look perfect. So I think I'm going to risk. I'll buy here, but I only want to risk half. What's half of 21 points? About 10 points. Go over here, 10 points of risk. Do what? Yeah. I can go to the MNQ and buy 10 contracts to reduce my risk on this. If I buy 1 contract on here, I'm risking more than I want to. That's the minimum on NQ. If I go over here, buy 10 points, it'll be the equivalent of halving my risk on this. Halving, So there's another place you can use that cute little table or whatever. The third, same deal, just weird pre-market ranging. And in the open, it was really, you're not sure if this is going to break out. It comes back down, then you're like, okay, well, is it going to keep going down because it was a fake breakout to the upside? I don't know. No zones are forming. That's the bottom line. No good zones are forming. This forms, and then it just freaking nothing good. Kind of a decent little zone here, decent little zone. This is interesting because it's like, I think just being strict is going to help us with this. This touch on the red candle just invalidates it. And you do get this big boink up, but that's a fake out, which obviously we can see now, but it's kind of just turning into a downtrend. You know. So again, just listen to the market on this one, boys. Listen to those signals. And also not the best demand zones because of these wicks here. And here, God bless you. And then you just don't get a good bounce. I think that was all that happened Monday. Yep. Yeah, dude. So I'm not too worried about not taking trades this week. I might I'm busy at work, so it's like, is this cope? I don't know. Am I subconsciously coping? Maybe. But I'm okay with chilling for now. This could just be a no trade week. I don't know. I don't know if there's news tomorrow. I don't know if there's news Friday. But that's okay, man. I was thinking about going back down to the 1 minute and doing some back testing there because this is how it started. It's how it all started. And this is how the 200 EMA came into play. But I don't know. That kind of feels like a symptom of FOMO. If I'm like looking for more opportunities, this is kind of like also you have to find a balance of where you're comfortable not trading. How long are you comfortable not trading for? Do I want to like kind of artificially inject more trading opportunities? I don't know. Because maybe I go into the 1 minute and I do see more opportunities, but it's like 3 to 5 a day, which I don't think it is. I think it's still going to be like maybe 1. I don't know. It feels kind of like FOMO to me if I do that. Feels like I'm getting itchy. So I might stay away from that. Or at least I might stay away from actually trading the 1 minute. Yeah, dude. Enjoy my risk table. I love tables. I love making tables. I love looking at them. I love making tables, look at them, and I love looking at tables. All right.